Yeah, good day to all forex traders, wherever you are. How's everything at your side? I am Adekoju Musa, a forex trader, a professional forex trader, trade indices, trade all forms of financial markets. Today, I want to quickly talk about a particular chart pattern called flag. What is a flag? A flag is a chart pattern that forms after an impulsive move has occurred over a period or a particular period of time. So, what are the components of a flag? A flag consists of a flagpole, a flag itself, and the continuation form or another impulsive moves. So, before you look for a flag, you can check flag or look for flag. Very easy to check on lower time frames. On what? On lower time frames. On lower time frames like H1, 1 hour time frame, 30-minute time frame, 3 minutes time frame. You can also look at it or find it on 4 hour and daily time frame and some other form of time frames. But it is easily seen and found on lower time frames. On lower time frames. So this dog USD, this is what I found today, and this is what I want to trade today. How would I trade this thing? I already seen that it's a flag. How did I know that it's a flag? One of the reason I know it's a flag because of this. This is the first one. This is an impulsive move here. I try to locate an impulsive move. This is the first one here. Then also I try to locate the consolidation. The consolidation. The consolidation. This is a consolidation. This is a consolidation. The consolidation occur when prices trying to gather momentum. When they are trying to gather momentum. So consolidation we try to build up. As it build up, forex traders that are experienced traders knows the next thing. As you are seeing it now, I can find a pin buy here, pin buy here, pin buy here, making three touches, three touches. What's the next thing? Let me also look for another touches. This is another one touch. This second touch. So I will join it together. I will join it together. I pick this trend line tools. I pick it. I join it with another one here. You can see it from a flag. So I forgot to tell you there are two types of flag. You have a bearish flag and a bullish flag. A what? A bearish flag and a what? A bullish flag. This kind of flag is what is a bearish flag. Why? Because the market, the impulse move or the impulsive move is what is in the downtrend. Is what is in the downtrend. In that case, is what is a bearish flag. So once you have joined this flag together, let me change the color of the flag pole. These are flag pole. Change it. Let me change it to color blue. Color blue. Yeah, I've changed to color blue. Let me increase the thickness. Let me increase the thickness. So I've increased the thickness. So what's the next thing for me now? The next thing for me is to look for zones, zones where reversal is likely to occur. Normally, reversal is likely to occur on this trend line here, this kind of trend line here that is acting as a support. It's acting as support. So we should expect a reversal anytime from this place if the market touches or prices touches this trend line. Because when you are trading this pattern, you don't just look at okay, oh, this particular prices has touched the kind of trend line. The next thing for you is to set a penny order. No, you have to look for zones whether something come up there. From this place now, I can see there's a zone around this place now. So let me pick my horizontal tool. So I put it here, I drop it here, I drop my horizontal tool, I drop it here. You can see where I drop it, you can see where I put it. So then let me go down. You can see any reversal pattern. You can see any reversal pattern. So I've seen a reversal pattern again. So let me put another one to mark it out. So this is a bullish engulf here. There's a bullish engulf here. This is another pattern of trading this thing. So this is the pattern here. So this pattern will not allow the prices, will not allow the prices to do what? To push up further. So when you mark your zone like this, what's the next thing? Just pick a rectangular tool, then paint that area. Paint it as what? As a zone. So you paint as a zone. So you paint as a zone. You can change the color if you like. So I painted it. Once you paint it, then you can remove this line. And if you like, you not remove it. So that's about that. So once you get the zone, then find look for another zone. Here now I've seen another zone here. This is a bearish engulfing pattern. Let me mark it out as well. I'll mark it out like this. Then mark it out like this. Bam. So with this, I've been able to make an important point here. So I'm painting it, marking the zone, marking the zone. I like colors, so it's very easy for me to know where I am when I use this thing. So what's the next thing now? Because it's a flag, you expect prices to touch this particular support before it now what? Before it comes down. So you can also use for arrow, look for arrow, this is an arrow tool. So we expect this price to move up into this zone. You know this is a zone, this is a resistance area. So you expect that when price touches resistance area, then what it pushes the price, it pushes downward. This is what we know as what confluence. You don't trade in isolation, but because this particular pattern is so thing is a flag, so it's a must for it to touch this place. Don't be surprised if there is a stop hunt or there is a fake out, but it will not fake out more than this particular zone. It will not fake out more than what this particular zone. Do you understand what I'm saying now? So that's the first way. So we believe this price will move up, and eventually reject the resistance area and come to this support zone or this demand area again, come to this demand area again, test the area again, and what? Push up to this area. Once it push up to this area, the next thing is that what? The market will what? Will push down. Market will what? The market will push down. Push down. At time, market will come here, it will retest. Come here like this, it will retest. You can that through, it will retest this zone again. Once it retest it, once it retest it, what's the next thing? The price is what is coming down. So forex trading is all about patience. It's all about patience. So this is one of the way of what of trading flag pattern. The same way you trade what the flag, the bullish flag. Then if you do this thing now, how will you mark out your stop loss and your take profit? Take profit is measured by what? By measuring the length of the flagpole and placing it exactly at the beginning of the upward movement here, beginning of the downward movement. This particular point, that's the new entry point where the market will likely start coming down. So in that case, you can use this arrow tools. Let's measure this flagpole. Measure this flagpole. Measure it like this. This is it here. This is a flagpole. So let me remove it. So I'm removing it, and I'll place it here. Particular point here is where I'm placing it. This particular point where I place it is. Let me look for an eclipse. An ellipse tool is an ellipse. So is an ellipse. This ellipse will allow me mark the entry so that you understand what I'm talking about. So I've picked I've picked this tool now. So the next thing for me is what? Put it here. So as to show that what this is my entry point. Look at where I put my, let me remove the color. Let me change it to this. So I've changed the color so you can see my flag. You can see where the dot starts now. You can see it now. Let me move it around and see. So this is what we measure from the flagpole. Then we put it exactly here. Once you put it here, then you raise this particular chart. When you raise it, then you pick another horizontal lines. You place it here. Once you place it exactly here, that will be a what? The exact take profit. Exact what? Take profit. Exact take profit. There are two ways to take profit in this case, to trade this way. You can pick it, you can pick this trade from the up here, from the up here, from the upper part here, and set your SL and write it down. Let me see how many picks will they give us. If you write it down, do short position, you want to short it. So this is our entry point here. Then we want to write it down to this point. We are writing it down to what? To this point. Then our SL will be a little bit above this one, above our S, above this place. So our stop loss is not even up to one, it's not even up to 10 pips. It's not even up to 10 pips. So look at it now. So let's leave our SL like that. Look at it when you write it from this place. This is our entry point here. This is our entry point here. This first line here. This particular line here. Let me change the color so that you can see it. Let me change it to color orange. Black. Let me use black so that you see it properly. So this is black. I can make it thicker so that it will be obvious. So these are our entry line, these are our entry points, or you can also make use of this place as the entry point. So when you enter, then you place your stop loss above it, then you write it down to this place. So if this one is not there, you cannot, let me delete it. You can also come and target this thing to be on the super side, because when you place a trade here and it activates it, it will activate it, take your stop loss and push up. So that's the behavior of the market. We are not the owner of the market. Nobody owns the market. So market must behave the way it will behave. So the best way to do it, to do what? Is to come and wait for prices here for it to break out. Once it break out, then you take your you pick your trade and write it down. You may allow it to retest or pick it from the particular point here that it broke out. Because at times price may not retest. Price may not retest. So that's what we know as the fear of missing out. If you have FOMO, if there is FOMO, then you pick you make your entry here and write it down. You make your entry in that place, you make your entry there. Let's see our stop loss. Our stop loss will be a little bit wider compared to the previous time. Put it there and what we write it down. Write it down. So 27 pips to what to 85 pips profit. So but if it is the first place we enter here, we enter in this place, this particular point. These are our stop loss, and these are our take profit. These are our take profit. We have around 7 pips take profit to what to 14 pips. So this is a trade with low risk and what high reward. Low risk and high reward. So this is how to trade. This is how to trade a bearish flag. You can use the same method to trade a bullish flag and make huge profits. Make huge profits. So if you understand this thing, try as much as possible to like this video, like it and subscribe to my channel, and expect more of important and useful content about forex trading. When you follow this channel, you learn forex trading in a very easy way without disturbing yourself of big terms, big words, and different kind of strategy, archaic strategy that cannot make you profit, that will stress your learning curve, to stress you out, and at the end of the day, there won't be anything reasonable for you. So, thank you very much for watching this video. I wish you the best in future endeavor. Don't forget to subscribe to this channel and watch my video. Subscribe to this channel so that whenever I post my video, you can always get it and watch it.